I want to put the spotlight in my stock of the day back on Micron. The stock ripped higher in mid-December after blowout guidance. The company said it expects the total addressable market, or TAM, for high bandwidth memory to hit $100 billion by 2028, growing at a compounded annual growth rate of 40%. Here's the main driver. Demand for high bandwidth memory used in AI servers has simply exploded, leaving little capacity for other products like smartphone and flash storage. That is allowing Micron to charge higher prices for its products while earning fatter profits. Despite these clear catalysts to the stock, I find it absolutely wacky. Micron stock only trades at 9.9 times estimated forward earnings, according to Yahoo Finance data. For perspective, the S&P 500 trades at 22 times, and NVIDIA, which we've been talking about all morning long, trades at 25 times. The OB Roundtable is here to weigh in. Gil, coming over to you here on Micron, is this one of the overlooked names in the tech industry?
Well, right now we are very early in the memory cycle. So even if we are possibly in the middle or late innings of the overall data center build out, the progress that we've made in AI models has made it so memory is the next frontier. We need a lot more memory in the chips, in the installations, in the servers, in the data centers, and we've hit the bottleneck for all these memory providers. They are now unable to catch up to demand. And so that cycle is still in early stages. So companies like Micron, SK Hynix, and the part of Samsung that does memory are now becoming increasingly important for us to be able to deliver the multimodal AI models that all these frontier models are now deploying. And it caught a lot of investors off guard. But to your point, we may be still early stages of that cycle.
Dan, who is the NVIDIA of the memory market? Is it Micron, or is there another player we need to be looking at?
I mean, like we see it when we go to Korea all the time. It's a memory super cycle that's really going on. I think SK Hynix, front and center. You look at Micron, it's one of the Ives AI 30. You know, you look at SanDisk. I mean, to me, in terms of memory super cycle, I think SK Hynix, to me, continues to sort of be at the epicenter. But I believe all these stocks are going to much higher, just given where we are. And, you know, this is something that's still, I think, underappreciated in terms of what's going to be really a multi-year memory super cycle. Micron, at this price, I mean, this is like getting Mickey Mantle signed card at a garage sale.
Dan, where do you get these things from? Do you write these down, or it's just real-time creativity? Ines, beat that one. Come on.
Saz, you bring it out in me.
I appreciate that. I know I do. And Ines, I mean, Micron. Who would have thought a year ago we'd be spending a whole segment talking about Micron?
Yeah, look, and Dan Ives mentioned SanDisk. It was a top performer last year on the S&P 500. Micron has 43 buys, a price target of 311, and you had Bernstein that just upped their price target on 330. What these analysts are talking about, the memory bottleneck is real, and that's why you're seeing the stock performing so well. And if you pull up a chart, a one-year chart of Micron shows it's up 244%. That's a one-year chart. So Micron has definitely, last year, certainly caught up with the AI trade, outperforming most of these chip stocks.
Gil, last word to you on Micron. There still seems to be this somewhat of a dark cloud hanging over Micron and some of the other players. You can tell me if I'm wrong, but to me, when analyzing them, there still is this fear that a Micron builds too much capacity and there's not enough demand that will meet that capacity.
Well, I think the fear around companies like this is that they still make a commodity. Even if this commodity is very much in demand right now, it is completely interchangeable. NVIDIA can decide to order more from SK Hynix one year and more from Micron the next year, and it's completely interchangeable as far as they're concerned, which longer term means there's less pricing power and there's less sustainability for that model. Having said that, from a trading perspective, from a shorter term investment perspective, that doesn't matter when you're in a bottleneck.